Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Ravi Singh. Welcome to another edition of our weekly podcast. Global equities trended mixed on region-specific cues. Greater China region came under pressure amid foreign investor outflows as below consensus second quarter GDP data for the Chinese economy, despite upbeat economic activity in June, dented market sentiments. South Asian markets continue to trend higher on positive foreign investor inflows. US equities rose further on strong economic data and positive earnings reporting by the financial sector. For the week, the MSCI World Index rose 0.4%, while the MSCI Asia ex-Japan, MSCI China indices fell around 2 to 3%. In the US, the S&P 500 index and Dow Jones Industrial Average rose around 1 to 2%, while the Nasdaq Composite fell 0.2% for the week. Back home, Indian equities extended gains for the fourth consecutive week, touching new all-time peaks. The Nifty index trended higher on the first 4 trading days, supported by strong foreign investor buying, but pared gains on Friday amid mixed earnings reporting by index heavyweights in the IT, oil and gas, and the FMCG sector. Despite that, the Nifty index did manage to post a gain of 0.9% for the week. Broader markets performance was mixed, with the Nifty small cap index up 1.8%, beating the Nifty index, while mid cap index was up 0.7% for the week. Among sectors, banks, capital goods, and pharma led the rally with gains of over 2.4%, while the IT was the worst performing sector, recording a decline of 3.5% for the week. The Indian fixed income market remained stable as Indian government bond yields remained broadly unchanged for the week, as traders remained cautious ahead of the US Fed policy next week. US bond yields edged higher as lower than expected US jobless claims data reinforced a likely US Fed hike in the upcoming policy. The 10-year Indian government bond yield remained stable at 7.08%, while the 3-year Indian government bond yield rose by 1 basis point, while the 5-year Indian government bond yield remained unchanged. The INR appreciated against the USD as strong foreign investor inflows negated the impact of higher crude oil prices, stronger US dollar, and higher US bond yields. For the week, the INR rose 0.3% against the USD to close at 81.9 per dollar. Brent crude oil rose 1.3% for the week amid reports of lower US crude oil inventory and China's pledge to reinvigorate economic activity. Coming to other notable updates, the first one was on India's rainfall scenario up to the 22nd of July. As per India Meteorological Department, cumulative rainfall for India stood at a 4% above long period average. However, the rainfall distribution remains very patchy, as East and Northeast India registered a 23% below long period average rainfall, with significant deficit recorded in the Gangetic West Bengal, Jharkhand, and Bihar region. Central India registered a 13% above long period average rainfall, with Saurashtra and Kutch, Gujarat, and western Madhya Pradesh recording significant excess rainfall, while Chhattisgarh recorded a deficit. Northwestern India recorded 41% above long period average rainfall, with Himachal Pradesh, Western UP, Haryana, Chhattisgarh, and Delhi recording excess rainfall, while Eastern UP recording a deficit. Southern Peninsula region registered a 12% below long period average rainfall, with Telangana recording excess rainfall, while SI Karnataka, Kerala, and Mahe recording a significant deficit. The second data was on RBI's FX reserve, which improved further. As per the weekly supplement by RBI, India's total FX reserve rose by USD 13 billion for the week ended 14 July and stood at 609 billion. The FX reserves are up 31 billion since the end of March, driven primarily by a rise in foreign currency assets amid robust foreign investor flows and improving balance of payments. At this point, I'll take a pause and thank you as always for listening. If you enjoyed this podcast, do like and subscribe.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.